Oh, God.
Good morning.
Hey, George, how are you, man?
Good. I see
Hey,
you're ready
George.
for, hey, yeah, the camera's off.
That's what you look like, George. I haven't seen you in hours.
I know, I hadn't changed a bit. Except I,
Ditto.
I did. Oh, yeah, exactly.
Well, I'm trapped at Peacewise Coffee. It's pouring down rain,
Yes,
but
it
it's
is.
not a bad place to be trapped. Got my hot coffee. So
How can you,
Nice.
is there no one else there? Oh, you're outside.
I'm outside because I don't want to bother other people.
Right. Oh, good.
Yeah.
Respectful guy you are. That ex-military. Anyway. So yeah, I'm sort of waiting for Patty to get on here and then Aaron. Let's see, is Aaron? Yeah.
Yeah, hey, morning, George. I'm here.
Oh, okay. Hey. Yeah. Yeah, good morning. What's the market doing? Is it up this morning? It looks like it's down a little bit.
Let me see. Everybody decided to text at 9:28.
Yeah.
Down.
Yeah.
Well, no, kind of flat. Well, let's see. NASDAQ 0.01, S&P's up 0.29, Dow Jones 0.67.
Oh, mine. Yeah,
It's
my
just
phone
me. I'm
shows.
only in tech stuff, so
Yeah.
Yeah.
Mine shows everything up.
yeah. Damn strategy. Ugh, I hope
Yeah.
Aaron says something positive.
Yeah.
Um, yeah.
Well, you know what they say, Patty, you can hope in one hand and
Yep.
then in the other one. So no, I don't have that much I don't have that much great news.
Yeah.
Okay. Well, I don't know what you do in the other hand. What's the other choice?
Hey, don't ask.
Well,
Yeah.
you hope in one hand and then you shit in the other and you see which one fills up.
Oh
Um,
God. Okay.
it's sort of
Thankfully, I've never heard that
it's
before.
sort of a
Okay.
Middle Eastern thing, you know?
Ew.
Anyway, um, listen, first of all, I have to say this is recorded. I'll try, I'll try and cut that part out when I put it on YouTube. And
Hilarious.
and then it is not financial advice, especially from Aaron.
Yeah.
Greg, you got a great view there, or is that a fake view?
What
Oh,
do you mean?
I mean, it looks like you're out in the not the wilderness, but it's a great room.
Oh,
And
yeah, I'm at my buddy's house. We're
are
like
you at a
up in New
creek?
Jersey. They got a little farm behind them.
Okay, a little far.
nice.
Yeah.
New Jersey.
Not
Yeah.
going to the beach, I guess. It looked like it was rough up there.
No, yeah. They got a house down in Seaside and the water was pushing over the dunes.
Oh Lord.
It's cold. Yeah.
Yeah.
Wow. Huh.
Tesla's up. Yay. Tesla
Yeah.
never disappoints.
Nvidia's down, but anyway. Yeah, I said no financial advice. So I just want to lay out a little bit what we're going to do this morning. We've got the financial reports from Patty and Greg, and then Aaron's going to join us with a crypto market report. And then we're going to kind of outline just a little bit about what we did last week and just touch on that just briefly. And then we want to jump into real world use cases for stable coins. And speaking on those two, is anybody that wants to speak on it, that's fine. But I've asked Doug Morton to speak about his potential use case for stable coins, and then John from Bank Social will join us and speak about his projects and get a little bit deeper dive. So that's kind of the setup for now. Anyway, thank you
Cool.
all for being here. So why don't we go ahead and get started? I'll probably extend the call. So, you can just take it away. Greg and Patty, y'all are the market experts.
Yeah, Patty,
Yep.
I'll let you take the lead. You got the highlights, and then I can chime in.
Okay.
Yeah.
All right. Yeah, it's been a pretty down week. The Dow's down 0.22%, S&P down 1.21%, NASDAQ down 2.5%, and the Russell 0.30. So it's been a slow drift down for the past 2 weeks. Gold is also down less than 1%, but still 0.67, and over a whole month, 2.13. Silver's down 0.71 for the week and down 2.9 for the month. The dollar has eked up a little. Over the past month, it's up 1.21%, which is, negative for equities. The 10-year is pretty steady, although it's down from, I guess I haven't been on the call for almost a month. Last month it was 4.4. It's at 4.32 this morning. And WTI is up today, but down almost $7 over the past month. So Jackson Hole meeting, George asked us to mention something about that. The only thing I really have to say about that, Powell is speaking at 10 o'clock. Yesterday in the morning, about 5 o'clock, the percentage of anticipation, the CBE, estimated there would be an 81% chance of a September cut. But as of last night, it was down to 70%. I didn't see any estimate this morning. But even if the Fed cuts 0.25% and a quarter percent in September, it's anticipated it's going to be like a hawkish cut, which could be negative for the market. NVIDIA reports next Wednesday. I was hoping that would lift the market a bit, but there's still that China chip issue that they don't trust that the NVIDIA chips do not have a back door. So that's kind of weighing on NVIDIA. And overall, I'll say the last 2 weeks, trading volumes have been low just because it's the end of the summer. This week is also low. Next week is the last week before Labor Day. And so I don't think a lot of people there's a lot of retail, but not a lot of the big guys are buying or selling.
So
that's all I got.
So now China's concerned that we have a back door.
It's the pot calling the kettle black.
Interesting.
Yes.
Yeah.
That's all I have. Take it away, Greg.
So
yeah, I think, and then I think from like a geopolitical, I think everything's kind of rolling over after the Russia summit. I think that's where some of this like sell off is coming from. There's like a big run up to it with like the race to safe haven assets. And then I don't have much to add. You kind of covered everything there. I'm just watching the interest rate market right now because I was reading some interesting stuff about right now the housing market is in a position where like existing homes are actually more expensive than new homes, and it's because of the golden handcuffs from these 2 to 3% interest mortgage rates. And so if the rate does come down in September, then the interest rates come down. And I think and if Trump has his way and we do get the interest rates down, I think it's going to create an interesting environment for the real estate market because people with the golden handcuffs are going to, there's maybe not all of them, but some portion of them will come to the market and start selling, and then we have more supply on the market. And I just see that driving the housing market down. So that's something that I've just been watching. And with the replacement, I think Trump replaced one other governor this week. And I think that the
asked you to resign.
Yeah. I think the drums are getting louder for Powell with some of the things that are going on in Congress with the perjury charges. I think that's him.
Yeah.
that's what that's what I've been watching recently.
Yeah, he asked Lisa Cook to step down because she'd been some ethical questions on a mortgage submission
God.
for some houses that she said, I ain't stepping down. So
Yeah,
we'll see how that goes.
Well, she said she was going to submit paperwork to counter whatever the claim was.
Yeah.
yeah.
So she,
Yeah. So
yeah.
so we'll see what happens there. And then I'm just watching the housing market like pretty closely, just because I think that that's going to be like a key driver for growth, especially with the prices for everything. And then on top of that, what I was also reading is right now is apparently one of the tightest labor markets in terms of job searches and unemployment. So there's these other, I guess, like indicators that are going on with the overall economy, like indicating that maybe hiring's like freezing up recently. I know in one of the other calls we had talked about this, but right now it's one of the toughest times for college graduates to get a job at the moment based upon the unemployment numbers and Indeed application data. So that's another kind of interesting thing that I'm just watching as well.
I heard it was no, this was a few weeks ago. 6.3% can't find jobs.
Yeah, yeah, and I don't have like a statistical average to have some type of benchmark or reference point for comparing that. This is just me reading articles, so take everything I say with a grain of salt.
No, you're accurate.
Yeah,
Over the weekend, I listened to all sorts of economic news, and that's much higher. It usually hovers around 3%, so it's twice as high.
yeah,
People are graduating, but they can't find jobs.
yeah, which is interesting, right? Because it's like stock buybacks are at all-time highs, and like apparently investment is coming to the States. So it's just like, how long do we need to wait to see that economic gain from, the trillion that Trump drummed up in the Middle East, and then, Apple in reinvesting. So I see a lot of on the horizon. There's a lot of capital coming into the States. It's just where are the jobs, and when does that become an actual economic driver?
Yeah, I don't fully understand why we're having such a problem. I mean, I have a son
Yeah,
too, who's going through the same thing. He's perfectly
Oh,
well educated, and but he's now doing a master's degree because he can't really find the right job, and it's kind of like, geez,
that's
you
what I
know,
was reading about. That's fascinating.
I don't get it. I mean, he should be able to get a job pretty easily, and the unemployment is down, so whatever.
is
Yeah.
is he in
Yeah, I appreciate it.
technology?
Yeah, he's doing well. He was econ, and then now he's doing. He's doing an online at Georgia Tech, masters in computer science. But whatever. Well, he'll find something. But it's like, geez,
He's in the
Yeah,
right
he's
field.
curious, right?
yeah, yeah.
Well,
Yeah,
it's
the
a
issue
fun
I'm seeing
baby.
around that, especially because I'm hiring in the space, is most of these guys can't do basic things that I need them to do.
Yeah,
I can hire a kid in India, 18 to 22,
yeah,
that can do these jobs, but I'm getting people with bachelors that can't write SQL queries.
yeah. That's interesting.
Interesting.
Here you go.
And AI is factoring in as well, is it not?
Yes.
I feel like that's why there's like a big pause, or like maybe that might be like a reason that like larger companies are not necessarily hiring. Either that or they see like the economic headwinds.
Well, out here where I'm sitting, AI is having a minor impact, but it is the lack of skills that is having a much more major impact in the ability to hire new graduates, because there's a whole list of skills that they are simply not teaching them that they need to know, and they don't require them to have the classes for.
What kind of skills are we talking about? Are these like not social skills?
Showing up on time.
Well,
Oh my
there's
God.
all those soft skill problems, but the other problem is things like, they take a programming class or two and they think that that's the end of what they need to learn, as opposed to learning things about computer architecture that goes more than 3 millimeters deep into the top of the case of their computer.
Hmm.
Okay.
Well,
All right.
that's really going to be the problem with the next wave of kind of AI gap filling. Is sorry, everybody, it's John Wingate. I jumped on kind of late. But yeah, that's what we're seeing is like the next challenge with AI gap filling is there's going to be like a workforce gap where people are just using AI to try to become experts thinking the AI, but it's really just a mirror of your expertise. It'll help you get to decisions faster, but just like if you're an incompetent boss and you tell people to do incompetent things, then you're going to get incompetent results.
There you go.
I mean, last week, over the last month, I've probably interviewed 40 plus candidates, and I ended up going with a 20-year-old with no degree that can use AI over a lot of these bachelors because they can't do SQL queries.
Oh my God. Wow. Well, good for that person. Can I mention that someone was diagnosed with the plague in California? I was like, oh my God, we're going to have another pandemic.
From a flea bite.
Oh, Jesus. I was like, and it
They already
is
had
part
the
of
plague.
the
They
new
were in
cycle that we're
California.
going to be in.
Like
Yeah. That pool is
they
probably
had
going to
enough
fly to
problems
South
as
Carolina.
it was.
Yeah. Well, I'm keeping up with that because that is, if we have another COVID kind of event, that is going to shake everything.
Well, it's going to be even worse because people are probably going to default to not listening longer because of what went down last time, and it could turn in if it's a real problem, that could turn into a real problem. Like if everybody just dissents because their immediate default action is, oh, this is COVID part 2, they're just trying to lock us down again. That wouldn't be good if it was a real disease.
Yeah.
Right. But if anybody needs, this is financial advice. If anybody needs any help in learning how to trade, they're welcome to come to my house and I will share.
Okay.
You don't have to leave your house and you can make some money.
That's nice of you.
And she speaks the truth, but that's not financial advice. All right, let's shift over a little bit to Aaron and give him the floor. We're going to get Doug and John. Thank you for joining us, and the rest of you, thank you for joining us. This is awesome. Thank you so much. And so, Aaron, you want to take it away? Just what the heck is going on, and is it with that crypto?
Yeah. Hey, morning, George. Sorry about earlier. I tried to censor myself, but I blame Patty. So the Navy sailor came out, but no, it's all good. So we had the all-time high with Bitcoin last week and kind of, forecasted some pullback. 112 was what I was eyeing as far as to find some support in terms of technical analysis. I don't think we're going to see another all-time high before we test even lower. So some of the ranges that I'm looking at, I mean, we could still see maybe, a 119, 120 as of right now, but I'm not too excited about the bullish short term for Bitcoin. But I'm looking at 105 to 108 and looking for that 200 daily moving average to hold. Typically, I think it'll find support there. Outside of a black swan war, some sort of major event. And then just to put it on your radars, if something like that does happen and you see we break that 99, 96, 38 to 39K. So that's that's where I'm looking, like worst case scenario. So it's always good to at least have some sort of a range, because you never know. So if you do see that and you do have some powder, I would be interested in some sort of giant wick or, I've seen it before, so it could happen.
Okay, when is that? Like in September?
I don't think in September. That would take like a black swan event or something, that nobody could predict, and it just, that's like worst case. But I just like to see some ranges and have those support regions to where you could at least, if you're trading, kind of play a bounce, or if you're looking to buy some spot, here's a good area to, kind of ladder in or dollar cost average in. But yeah, that the 103, 105, somewhere in there, we'll see.
What is the 200 daily moving average?
I think I looked at it this morning. It was around 103, 105.
Gotcha. Okay.
Wow.
Yeah. So
But even that is a purchasing opportunity because, for it to go up to 123, you can't buy it there.
Yeah. No, I agree. And kind of off of that, you got that retail FOMO a little bit too with ETH, and everybody was screaming alt season. It wasn't alt season, in my opinion. We haven't started alt season. But definitely keep an eye on that on Ethereum. It did show some life in that Bitcoin dominance when it kind of trend downward and ETH goes up. So still kind of waiting, being patient on that. Don't listen to the hype of everybody on crypto Twitter.
Right.
Also, as far as like buzzwords in crypto, it's trending down considerably, so that really retail interest isn't there, which kind of leads to that bearish thesis that I kind of talked about before. And with Tether, kind of adding another layer of legitimacy, they hired Bo Hines. So stacking the deck with becoming more legitimate. And also, just a friendly reminder, do not buy celebrity meme coins. Kanye West dropped a coin that hit, I think it was 3 billion in a matter of like 45 minutes.
Whoa.
And I think it's sitting at like 80 million now. So just
Whoa.
don't stay away.
All right. All right.
That's
Yeah,
terrible.
so just a note on that. The way you can tell if those things are going to do that is you can go look at the ratio on the dexes that they launch these things on. You can go look at the ratio of the amount of coins that are in the dex relative to the entire supply. And if you see it less than about 5-6%, the price swings are going to just be like $100 sell will tank, $1 billion coin. We see some of these meme coins that people create liquidity pairs on that are less than like 0.5% or 0.2% of the overall supply. It means like any tiny buy or sell will make the thing go wild and crazy. So that's just a little tip for you guys on evaluating meme coins if you're going to play in the space. I don't do it, but if you're going to, know what you're doing at least.
Yeah. And to add on to that too, with the Yeezy, they were able to. So if you remember Libra, supposedly the group that was behind Libra was the group behind Yeezy. So YZY, you can look up the chart. But what they do as well is they keep a giant portion of tokens in their own supply. So you can look at who were the biggest gainers, and there's nobody that actually bought tokens, but you can see millions of dollars of sales to where this guy made 1.4 million in 45 minutes. This guy made 200,000 in 45 minutes. So they were able to generate a ton of liquidity. I think they had like $125 million in liquidity. So they're pretty good at what they do. In that very same day, the Libra group had their USDC unlocked by, I think it was it was like $57 million that they unfroze. And then this token dropped the very same day. So it's very,
Crazy.
very suspicious, but interesting to follow.
So two things real quickly. Paul's got his hand up, and somebody asked about Cisco. So let's wrap this baby up and move on. But Paul, we're gonna respect your raised hand.
Yeah. One question to Aaron. I was looking at a chart. It was tracking Bitcoin performance kind of month over month, and I don't know. This might be the first time in August post halving year where we actually haven't seen a significant run up. I caught it, and I don't know if I shared it in the chat, but I don't even know if we're up for the month of August. Last time Trump was president, I think Bitcoin saw like a 60% run up post halving August. So this could be the first time in, I don't know, quite a few years when we may have bucked the trend.
Okay.
Yeah, no, I would agree, Paul. I think definitely it started off the same or similar to that 2017 2021 kind of cycle, but it has separated itself, and I do think it's based on the institutions, based on the amount of just interest in bigger players in the market, to where they can kind of have more control and reduce some of that volatility that we've seen in the past.
All right. Well, why don't we do this? Why don't we watch Greg stretch? And so Greg, um, and then we'll just move on. So last week we took up stable coins. We had Paul recap actually what stable coins were and the Genius Act, and that was one of the issues that we took up and got some definition on that. Then Patrick joined in with some explanations about, first of all, was that miner that was developed by Jack Dorsey. I think, Patrick, you mentioned that. I heard another blurb on that particular miner, and I think Jordan knew a good bit about it as well. So you guys, thanks for being on top of those cutting edges. And then, so what we wanted to do was actually see if we could identify some actual real world practical applications for stable coins and what they're going to be doing, how they'll change the landscape. So Doug Morton is going to take it to start with, but then I do want to mention that John Wingate is on the call with us. He kindly mentioned us yesterday in his sessions call that he was going to be in South Carolina virtually today. And thank you for joining us, John. He's going to take it and kind of finish out the call. And I want to mention that not only is John going to speak about the stable coins, but I'm asking him to speak about several other modules that he has on the Bank Social platform. So these he's already spoken about, and he can articulate those. But I have extended the call. So with that, Doug, if you would enlighten us a little bit about what your project is and kind of your thinking. Can you hear us? Can y'all hear him? I cannot hear him.
No,
No,
I hear you.
can't.
Doug.
Oh,
Here we go.
he
Nope.
muted us.
No, still can't hear you.
We need Garrett Morris.
He's typing something. Oh, well. So there you go.
Too many
Oh,
microphones. You got to
well,
select the
is
right
John
one.
on?
John is on. We might just have to
Do
get
John.
I only have
started with
3.
John.
Makes
All
it
right,
easy.
Yeah, I'm
go.
happy to jump in. So, we've been doing a lot of different use cases with stable coins. Of course, at my talk last night, I talked in front of probably about 40 people up at our offices. We do some private events up there, and just launched a book, if I can plug that real quick, called Quantilarity. But a lot of the stuff we're doing right now is even beyond stable coins. And so I'll start with stable coins, and I'll talk about some of the other things we're doing with DLTs.
Because
But with stable coins specific,
we do want to focus on stable coins to start with, but I
yeah,
want you to
yeah,
give another thing. So, okay, take it away.
yeah. So with stable coins right now, we're just seeing a explosion of interest from banks and financial institutions. So we just a couple days ago crossed over the line of 40 financial institutions that are on our platforms, and all of them right now, and we're running a pilot for intra bank settlements so that they can do private settlements between each other, both on public chains and on private chains with immutable hash checks to public chains. So I'll talk about what all that means. But in the stablecoin realm of what we actually have going on right now, we're doing everything from international settlements on stablecoins. So just the other day, we did the first international SWIFT compliant, ISO 2022 compliant, multi-chain international settlement between a Bolivian bank and the United States, Bolivian Securities Exchange, a Peruvian bank. There was like 6 people involved in the money movement. And it wasn't just it certainly started. Go ahead.
Go ahead, just keep going.
Okay. It certainly started as a pilot, but we've already done several more transactions in the last few weeks, and that's starting to ramp up big time. And a lot of what we're seeing is institutional interest for the consumers for dollar stablecoins, for USD backed stablecoins. And the primary driver of that
is the stability of the US dollars. For all we can say about its lack of stability relative to Bitcoin and all the other things we could talk about here, the reality is that in most countries, diversification into a dollar is something that's been sorely needed for a while. You saw Argentina made a lot of claims last year, a year and a half ago. They actually ended up doing it, and we're seeing vast swaths of the really the developing countries, the developing world. So a lot of Latin America, a lot of Africa, a lot of APAC, even parts of the EU are really starting to lean into stablecoins. And what we're finding is that certainly the public stablecoins like USDC and Tether have an endpoint component, a public component, a cash equivalent component. But what we're seeing a lot more of right now is companies wanting to utilize stable coins that are, and banks and intra-banks wanting to utilize stable coins that are still on public chains, but that are also controlled by private institutions like us, because we can bring things that Circle can't to that equation. We can tie KYC to the coins, we can freeze, we can put AI on top of them. We'll talk a little bit more about that.
John,
but
let me ask you something quickly.
Sure.
You mentioned ISO 2022, and many of us are kind of maybe briefly familiar with that. And why is it important that it was part of the transaction between a foreign country and a U.S. bank? So kind of take it down a level, I guess.
Yeah, absolutely.
Yeah.
Absolutely. So ISO 20.22 is a payload standard. There's hundreds of messages in it. So think about it like just a common way to communicate certain transaction types. So if you're repaying a loan, or if you're making a payment, or if you're passing along identity information, there are standards in place, and they're loose. They're quite loose, but there are standards in place for the names of the fields, the data you put in the fields, and then how you package that up and how you send it. And what we pioneered a couple years back on Hedera and Ripple and many of these chains is the ability to tie off-chain metadata in ISO 20.22 format to on-chain transaction capabilities. And so what that really does is it gives us a common established communication payload that banks are already using for bank-to-bank settlement or international settlement. And at the end of the day, what it really does is it allows for faster adoption. Because if you're making them, it's, and the way I'll describe it is FedNow and RTP. In the United States, there are two real-time payment rails. One is called RTP. It's the acronym. It stands literally for real-time payments. They have that trademark, run by the clearinghouse, been around for 6-7 years. It uses the ISO 20.22 standard. FedNow is run by the Fed. It uses the ISO 20.22 standard. Why is this important? They're both new rails. They're both SEPA in the UK or in the EU, SPAY in Mexico, OzTrack in Australia. They all use the ISO 20.22 standard, but they're all separate rails and they're all multi-rail. So there's not one rail ruling it all. And the reason why it's important for these distributed ledgers to have the capability to interface in a common way is so that we don't have to retrain all of the core systems that the banks are utilizing for settlement between themselves. Right. So that's why that becomes a very critical component. And when we can go in and when we can demonstrate how we can move a token on a chain, but still relate it to a payment in an existing way, the same way you would do a FedNow transaction or the same way you would do an RTP transaction, that makes that integration go, orders of magnitude faster.
All right, tell us about, and that is really clear. I mean, mostly clear to me, but it really helped me understand. I hope everybody else enjoyed that explanation of ISO 20.22. I never really knew how to say it until I would call it 2022, but it's not. It's 2022. But anyway,
20022 200
20022. Okay.
Yep. But since I shoot, I call it 20-22.
20 off. Okay, got it. Okay, excellent.
It's the
I
Texas
did want you to
version
touch
of
on,
2000.
tell us about your Rivia, I believe it is, your stable coin, the RUSD.
Yeah, so RUSD, the acronym there, it really is for R, meaning our, everybody's USD. And the whole idea is, and the initial penetration that we're seeing is into community banks and credit unions. So we've already deployed our stablecoin settlement layer alongside other rails to settle for fractions of the cost that it settles, and in more real time. And the bigger benefit that we get out of it is that we have the ability to view the entire network of transactions. You know, people tell me a lot that, or they used to tell me, they don't tell it to me anymore. I've talked to regulators and talked to banks, central banks all over the world, advise central banks, and they used to tell me, my God, that crypto is used for such illicit things. And I'm like, man, if you think that's the case, just wait till you hear about currencies like the dollar or like the yuan. I mean, those things are used for horrendous things and have been for decades. I prefer using something on Bitcoin because even though it may be that I can't get it back, just like I can't get back a dollar, right? I can see it, I can blacklist it, I can, effectually negate it from the ecosystem.
Yes.
And that is more powerful than anything we can do. And now with the new ledgers and the new technologies that are coming out, Bitcoin at this point is 16, 17 years old, and even older if you look at the underlying Hashcash kind of contributions from Hashcash and where it really started. But the capabilities now with our ability to put AI on top of these public ledgers and even these private ledgers, and the ability to do pattern recognition, even though we don't have to know who the person is, right? Because privacy and sovereignty are primary, are pinnacle focuses of all this, right? We have to remain sovereign, we have to remain private, but that doesn't mean, there's a difference between privacy, sovereignty, and anonymity, because I don't ever want anybody to ever be able to ever see that I'm a scammer that took your money. There's a balance between all of that. And, just like right now, when you have cash, when you withdraw cash, there are CTRs being filed, there are SARs being filed. So it's really a balance between those things. And the reason why the banks love it is because right now with the Fed, when you move money across FedNow in real time or near real time, you lose all the visibility into where that money came from, where it went. You're having to rely on these other institutions. Well, that's not a trustless system, right? That's a system where you have to implicitly trust the other guy. And we can just look back at enforcement actions from the SEC or from the Department of Justice to know that even though it's a regulated institution, it doesn't mean that you can implicitly trust it. And so these new systems allow us to, and what's really cool is that because the people can own the rails, like the other thing I was talking about last night is, the one thing that has to remain a constant here is that the people need to own the rails. The people need to own the trust layer. And what that means is, when we buy coins on Bitcoin, we are maintaining the trust infrastructure of Bitcoin. When miners, right, when there's a whole plethora of miners or node operators, that's the trust network that's owned by us. And that's the way into the future. And then, we can even go as deep as AI and what's going to start happening here over the next 12 to 24 months, with data provenance. And I know this is what we're talking about with Dennis and a couple other guys, about governance and how do we come to decisions as humans, right? What's that trust layer for us to be able to know that an article was written by such person or data came out of such legal opinion, right? I mean, the amount of decisioning that's made from a place of having no knowledge or having skewed knowledge is it's mind blowing. And so when we start to look at how data provenance can start to be put on public chains, on trusted public chains, when we start to look at how ledgers can hash check to each other, and what I mean by hash check is I can take a zero knowledge proof, or I can take a piece of data that I know to be true, or that you and I know to be true, and we can agree upon it. We can create a check of data that we can put on Bitcoin, or that means nothing on Bitcoin. It absolutely means nothing. It's garbage on Bitcoin. But if you and I ever want to prove that we performed an off-chain transaction, we can prove to people through that immutable hash check that we did that. And so that's what you're going to start to see. When AI systems, when you look at the kind of the neurological breakdown of how AI systems come to decisions, those right now they call them tokens, and the identification of tokens in a decision pattern, there are companies that are actually working right now to put those tokens on chain so that those tokens of the decision are immutably recorded. So when you're looking at data, when you pay for a news article in the future, a New York Times news article, and AI's cobbled that all together, and now you're trying to discern signal from noise, or what you trust from what you don't trust. I mean, it's certainly a fact. It's an indisputable fact that New York Times art, and not picking on the New York Times, but New York Times articles have been written that are baseless, that have zero facts in them, or that are highly skewed to an opinion or a perspective not rooted in real life outcomes.
That's
okay?
interesting,
And
John, because I'm going to be going to a movie next week. It's called Good Night and Good Luck. It's a Everett R. Murrow thing, and there's going to be a joint discussion after about the clarity and the reporting that is given by various news outlets, and print and other media's outlets. So it fits right in exactly what you're saying about the New York Times, putting out stuff that is baseless, which they've been called down on before. But anyway, that's kind of interesting. But I want to jump in here real quickly and see if Doug is. I'm not stopping you, John. I just want to maybe
no, please,
take a second to get Doug
please.
in for a second, if he's ready, if his microphone is going to be working. No,
I switched devices.
okay.
All right. Yeah, who knows what's going on with the microphone. But so I run Alpaca RMS, retail management system. It's a point of sale invoice management system. And we've had Bitcoin and Lightning payments integrated for years, but Stablecoin kind of just put it to the side because no one was using it and no one asked us for it until recently. And so we're starting to put in USDC through Coinbase. And I personally, since I'm a decentralized, trustless person, want to put DAI in there, DAI's token. But that's been a little more complicated because you have to use a bunch of other third-party gateways, and I don't want to have to create the liquidity behind it. So I use third parties to plug it in. But PayPal was by far the easiest because they had already integrated it in their system, and it was just a flip of a switch basically to take PayPal's Pi USD. But originally when we were heading this way, we were going to put Tether as a payment rail since they're the 800-pound gorilla stable coins at $167 billion. But the reality is USDC was made much more easy through Coinbase and PayPal. So we're exploring 6 different stable coins: Tether, USDC, DAI, the DAI token, World Liberty Financial Dollar, First Digital, and PayPal. I don't know anything about the World Liberty Financial USD or First Digital. So realistically, we're looking at Tether, USDC, and the PayPal, and then DAI as a special project. I've got a couple customers now that run $8 to $10 million a year businesses, and they asked for this to see if they could cut their credit card costs by incentivizing customers to pay in stablecoin just based on the news from last month. And so right now it's just going to be, will people use it on a retail basis, because we're incentivized to use credit cards, but will it be enough to push them to changing to stable coins. There is friction involved there because you got to use an on ramp to get your stable coins, from the dollar. But that's where we're headed with it.
Okay.
So
well, I can step in there right there, and I can tell you that the friction. So what we built with our banking partners and putting this right in the banking app and on the banking rails, if we ask people to have to figure out how to swap in real time and do all this type of stuff, that's too high of a barrier to get grandma and get mom and get everybody else to do it. And so that's why we've embedded the stable coin right into the banking app, right into what you would pay with, and bypassing the ability to tap to pay right from your digital banking app. That's actually what we've done right now. And so that's more on the merchant services side, but I think that side is a lot easier to solve with open source systems like Clover. You can go build a Clover extension and go deploy it and have every merchant turn it on right now. It's really more on the bank connectivity side. You're right. You have to, the traditional paradigm has been on ramp, off ramp. It's clunky. You got to know what you're doing, but we've moved past that now. We are now past that.
Let me ask you quickly, John. You've got you've got Texas Credit Union, I believe. So if I had a Texas Credit Union account, I could go in and click on a transaction and I could transact it in stable coins. Did I get that right?
That's exactly right. So all the other products that have been deployed into banks and financial institutions at this point have been buy, hold, sell, right? Mm-hmm. Which are more indicative of the off ramp, on ramp type of mentality. What we've done is we've made it to where it's not an omnibus wallet, that's holding hundreds of thousands or millions of dollars. Segregated wallets. Everybody gets their own self-custody wallet, and you can get stable coins and go pay with them in real time. You can play with Bitcoin. You can pay with whatever you want. That's why we've focused on the community. Like, we don't see Chase Bank doing this, Wells Fargo doing this. We definitely see the community banks doing this, the credit unions doing this. And they more so align with DeFi anyway, ownership of your community, whether that's digital, whether that's whatever that is. And so that's what we're seeing, just a tremendous uptake in this. And yes, to answer your question, if you jumped in right now, you could buy a token and interact with it just like you would at a point of sale, not a buy, sell, hold, on ramp, off ramp type deal.
Got it. And but also if I had a Texas Credit Union account and I wanted to send something to my friend in, I don't know, South Carolina, can I do that if they don't have the Texas Credit Union app?
Yeah. So that's why I was telling you it's really important. The ISO 20-22 standard. That's why that becomes important, is because not everybody there will be a period of time where not everybody has the other rail on the other side. And so these rails have to be interoperable, so that if I'm sending money to a friend not on a network or not able to receive something in stablecoin or they don't want to receive Bitcoin or stablecoin or whatever, we have to be able to in real time fall back to another rail, right? And even fall back as far as ACH. If that's the furthest we have to fall back, because believe it or not, there are still institutions that don't even have real-time payments in there.
Got it. Okay.
But that's why it has to be interoperable, Jim, because if it's not, if it's clunky and you have to know how to do everything, it'll never take hold. It's got to be smooth. I just want to send money to a friend, and if the fastest way to send it is over our stablecoin rail, because we do have banks now and credit unions in South Carolina and Virginia that are part of that 35 group pilot program I told you about, where we identified about 40 banks and credit unions that settle between each other all the time, and they don't want to pay $1 or $2. They'd rather pay, fractions of a penny to settle between each other. And that goes directly into the other person's bank account. And there's other things that happen around it. I won't get into all the details of it, but that type of instant real-time crypto network, public DLT based settlement, that's happening right now behind the scenes. And people don't have to know that they're sending crypto for this to happen. But that's why.
Exactly. Yes.
Yeah. They don't have to know.
Transaction. And
it's a transaction. And that's where we are. That's the state of today's crypto. Is it's no longer the on ramp, off ramp. That's legacy to us. That's legacy to us. It's really about.
Damn.
And I'm not trying to diss anything or anything that's going on, but I also want to provide clarity into just how far things have come, right? Because we're way past at this point. We're way past the waiting for adoption. Now that Trump has come in, now that the Genius Act has been passed, we've been talking, like I said before, to governments and banks for 4 or 5 years on this stuff. And they have been in the position, and some of them took our advice 1.5 2 years ago and started positioning themselves, launching these systems. And now that the Genius Act is turned on, the other side, the other banks that were waiting are coming online. So these instant settlements between banks, these ability to pay at the counter directly from your bank account with crypto rails and not have to use MasterCard or Visa rails. We're there. That's where we are.
Got it.
Yeah.
All right,
That's
well, let's do
amazing.
this. Does anybody want to jump in with a question to John? Because I'm going to get him to shift a little bit from just talking about those. I'm going to and we're running out of time. So
I have a question.
yeah, and
Okay.
I'm going to ask him a couple of other things. So we're gonna wrap this part of the conversation up. But Patty,
So the foreign countries that try to control the amount of U.S. dollars that are swishing around in their economy, does this totally avoid that conflict?
So let me tell you what's happening. I'm not gonna give you thoughts and opinions. I'm gonna tell you what's really happening right now. Okay, so a real story. I was in Bolivia a few weeks back, a month and a half back, and Bolivia is one of those countries where they are controlling, just like Argentina was, just like Venezuela was, the amount of dollars that can circulate in the economy, U.S. dollars. And it was encouraging to see that as I came into the airport and as I left the airport, everything in the duty-free stores and everything in the airport was denoted in Tether, in USD Tether. You couldn't pay with a credit card. You couldn't pay with anything. You could only pay with Tethers. Well, you know what was really amazing? With our app, with our embedded crypto app inside of our bank, inside of my bank account, which if you go on our Twitter, you can actually see it in working. I didn't have any tethers, but I wanted to test it out. Okay. I was like, this is so fucking cool. I want to test this out. So I went into my banking app. Okay. I took the $55. So I think I'm the first person ever in the history of the world who directly through their banking app, I loaded my bank account with crypto. So I brought in some crypto, loaded my bank account, and that money sat in my bank account. And then you know what I did then? Well, I walked up to the counter. I did exactly what I just told you I did. I took US dollars in my bank account, and with just a tap, and technically it was a QR code scan so I could get the wallet address, I was able to pay in a Bolivian freaking airport where everything was denoted in USDT, and I didn't have to use a credit card. I didn't have to use shit from my American bank account.
You can open the door.
That's awesome.
Isn't that
amazing.
awesome? And so the governments are starting to realign around, and I was down there speaking to the government. The money supply, money controls freedom. But like it or not, money controls freedom. Everything you do, everything I do when we wake up in the morning has a transaction involved that's rooted in finance. And just like what social media did 20 years ago, crypto and ownership of the rails, that's what social media did. It gave us ownership of the media, right? Yeah. That's what it did. It gave us ownership of the media, right? Now we have ownership of the transaction. We will own the transaction. We will own the outcome. And that's what's happening in Bolivia right now. It's fundamentally transformed. The last several years has fundamentally transformed the people's ability to circumvent government restrictions, and not for illegal purposes, but just to live, just to every day go buy food, go buy milk, go buy bread and eggs. Right now, go ahead.
Yeah, I'm gonna get because we are running out of time, but I've got a couple of guys that want to ask a few questions. I see Patrick's got his hand up, and Paul. So you guys answer it quickly because I do want John to tell us about his Secura and his purchase recently, or his merger recently with Credit Union Books and a couple of other things. So, and sandbox testing. So I got a couple other, but Patrick, if you'll jump in real quickly, appreciate it.
Sure. And if it's easier just to write these back to the group, that's fine. You sort of touched it on already, but it seems like if stable coins succeed globally, it could eliminate the need for indigenous currencies. So even though there's a certain general movement around the world to sort of not hold dollars, it seems like USD could reach singularity as a stable coin. And if that were to happen, it seems like maybe the on-ramp, off-ramp problem, there would never be a solved, there'd never be a good reason to ever convert out of stable coins unless it'd be to go into Bitcoin. And countries around the world would no longer need to hold USD in reserves at all. And that would open up trade among them pretty big. So your thoughts on that? And then the other one is, what do you think about, since stablecoin issuers have to act as narrow banks and hold 100% reserves, how much deleveraging do you think will occur in the banking system? And again, you can type those to the group if it's faster.
So on the question of, do I believe in the singularity? No, I don't. Read my book. I do not believe in the singularity. I do believe in sovereignty. I do believe in national sovereignty. I do believe in national identity. And so I could be completely off base on this, but I do think that it's more of a way to risk your country, de-risk your population, de-risk your asset pool. Certainly some countries maybe who are struggling with their own currency, like significantly, a lot of countries in Africa will benefit from a stable coin for a period of time. But I think a national identity is important. And I think interoperability of money, be it that it is, makes having to hold, like, makes a necessity of a future where you have to hold the dollar, not something that I see as a mandate or like, a convergence to a singularity like you described. Certainly I could be completely off base, but we're actually seeing that, like in Bolivia, what I was just telling you about. It's not that the country doesn't want to use its own local currency, doesn't want its own identity. It's that their currency is being messed with so much that they don't want their currency to be messed with. But now that the government is changing, and Bolivia is, I think, a very good kind of microcosm of what's going on. Now that their country is changing, the people do want their own identity. The people do, but they also want access to other foreign currencies, right? And so I think both can exist and both can strengthen each other. But I do think it'll strengthen the dollar's reserve currency status globally. And then certainly, I think it's certainly proving out that more than Bitcoin are being held on balance sheets. Ethereum is certainly in the news a lot lately. And I also, believe that what we will see is that there can't be, and nature doesn't have any instances of this where there's just one to rule it all, a singularity, if you will. But I could go on a lot longer about that. I'll switch over to the other question.
You want to jump to Paul, and then we're gonna just because we're gonna wrap this thing up in about 5 minutes.
Sure.
So John, thanks for the extra dimension around the ISO. I've been following it on the fringes here for quite a few years. I always equated kind of this transition that we're going through with crypto is that, before this migration was completed, actually, if thinking back to like healthcare, right? When we went through ICD-9 to ICD-10 transition, right? Relating to healthcare claims, kind of similar to that, right? And the way that crypto plays into this is that before you had the message and then you had the transaction. Crypto consolidates the two into one, right? And ISO, I think the migration, I read something on Twitter. I think that the migration was actually complete this week. But you could think of it as all of Swift, ACH, different blockchains as being roads, right? And this is an upgrade to the signs on the roads. But related to kind of the DeFi example that you provided. So the question is really this is, sounds like what you're saying is that DeFi is going to be it's going to provide an open door for some of these state and local banks and credit unions, right? To really bring that local aspect back to banking. Because I was always thinking like, I don't know if people are in a position to self-custody and be able to, do their own transactions, but with, stable coins now, sounds perhaps people will be able to, now go into credit unions, deposit some of their cryptos, get stable coins for that, and then go out and do their own transactions. Would you see, some of these smaller institutions leading the DeFi revolution?
They are leading the DeFi revolution because that's what DeFi is about: decentralizing finance, not centralizing it to a singularity of Chase Bank. Chase doesn't want Wells to exist. If Chase could buy Wells tomorrow, it would. If it could buy all the banks tomorrow, it would. It does not want competition. It wants totality. Nature doesn't. That's why we fought against this for so long. It's not because we want to fight. It's because it's not inherently what we want as humanity. And so there, and Chase has come out and said this. Chase is not trying to hide the fact that they don't care about the communities. They don't care about the branches. They don't care about solving problems in local places. They want all the money, and they want to be the big money holder of everything. And so what communities are no longer just physical, right? They're no longer geographical. They are dispersed, they are digital, they are people can come like we are community right now. We're like, right, why can't we create our own community financial economic tool and make that interoperable with anybody else who finds value in our ecosystem that also exists in another ecosystem? That's what's happening. Now, I think for the next probably 3 to 5 years, there'll be a proliferation like akin to what we had in the Wildcatter days. We're coming out of that. It might be less than 3 to 5 years. I mean, the meme coin kind of extractive meme coin phase is kind of waning out, but you will see a multiplicity of currencies, and you will see value systems that spin up, just like credit unions and community banks spin up for a purpose. Like, oh, we're going to create our community bank to solve this problem in our community. Right. That's what's going to happen. That's what DeFi is doing. But creating interoperability and making it regulated so that it can exist in a way that we can use all over, so that it goes to the masses. That's where we're at right now. That's what's happening. It's not a dream anymore. It's actually here, and it's happening.
All right.
What about, wait, George, before we get off this fall, what are we supposed to invest in? So should we be buying Coinbase? Should we be buying what?
I think you should invest in the rails. I think you should all be investing in the rails. What I said back before was we need to own the trust. If we invest in private companies, that's not the same as holding the keys to the trust layer. When you buy Bitcoin, you hold the keys to the trust layer. When you operate a node, you hold the keys to the trust layer. When you have some XRP, when you have some HBAR, when you have some Solana, when you have some DAG, when you have some XLM, when you have some Polkadot, when you have some Matic, when you have some Binance, I could keep going. When you have that, you own keys to the trust layer. And as interoperability starts to happen across these, it's critical and crucial, less as an investment and more as a duty to humanity to help maintain these systems. And I'm not saying you should go out and buy all of those, but certainly buying a few of them does more for humanity than just going and buying Coinbase. I'm not saying don't buy Coinbase, but
yeah, and I haven't said anything all call today, but last week I was saying right along those same lines that in 10, 15, 20 years, the people that were buying the actual assets, Bitcoin, ETH, whatever it is that are actually holding that asset are going to be in a much better position than the people that are investing in these businesses, in these treasury companies. So I totally agree with exactly 100%. What you just said.
100%. But it's all about diversification too, right? One you buy for certain reasons, one you buy for another reason. I'm telling you guys to buy the assets on chain because that contributes to the trust layer. Buying some other company that tells you, yeah, trust me, I'm going to go buy a bunch of Bitcoin and I won't change my mind about my policies and my board policies. Well, we don't have to look far to see that that's already not true. What did Saylor just do? I'm a fan of Saylor's. Do not hate Saylor. Not trying to put anything on Saylor. This is the nature of corporate structure. Yeah. He didn't do anything wrong. He did what corporations do, right? He's completely within his legal limit and his legal right to do it.
All right,
so
what did he do? Did he sell?
He changed his position on how they would allocate and when they would do certain things. So, several months ago he said we would do this, and then he changed how that, when they would liquidate, when they would buy, when they would issue more stock and dilute everybody else. Look, there's no problem. I have no problems with that. That's smart business. He's a smart business guy. Buy buy into Sailor, okay, but also buy Bitcoin, because that's more important for humanity than buying Sailor.
All right, John, what I want to do is the reason I'm anxious is because this thing is going to do a hard stop, and it's just going to be, we're talking and it's going to stop. So,
all right,
here's what I
Thank
want
you.
to do.
Learned a lot.
Here's what I want to do. I want to give you a couple of topics, and I want you to give me an elevator speech on what they are.
Yep,
So
you
got
got
a
it.
minute to get down the
Go,
elevator.
go.
Okay, Secura.
All right, Secura is our security platform, utilizes AI, everything else. Basically, we can monitor and help you recover tokens. So many people, they get scammed, they don't know where to go. For just a super low monthly fee or one-time yearly fee, it's like $6 a month or $70 a year, something like that. You can get complete protection. If anything ever calls, you know who to go to.
Yeah.
We've got FBI, former CTO of Chainalysis, former Secret Service head of the Eastern Division of the United States for digital asset recovery. We got Anthony Striano. We've got an amazing team of people who are there 24/7 to help. We've helped people recover millions of dollars with that platform.
I hope that Jim was listening to that, because he asked our friend Sarah Jane at Algorand, when she was on a couple of weeks ago, that exact question. If people lose their key, her first response was, we're talking about self-custody, but she also said that they have some ways to do that. You're telling us this is your way with Secura. So
yeah, and mostly we deal with scams, not too much. We have helped some people with lost keys, but mostly scam recovery.
Okay, so let's do Prospera, which is sort of a new product for you.
Yep. So that's really cool. So Prospera is our new investing platform. And what's really cool is we're going to be the first here in about a month and a half. In a few weeks, stocks will launch. Tokenized stocks are launching on the Bank Social app. You'll be able to buy stocks, they'll be tokenized. But what's really fucking cool is that in about a month and a half, a couple of our institutions are also launching the platform, and you'll be able to bring your stocks from your private wallet into your banking wallet, just like your fucking crypto. And then you'll be able to sell it there or move it to another place without having to sell it. And you can choose the institutions that best serve your purpose, or move some of them over there and some of them to another one. So that's really cool. We're really excited about that platform.
Very nice.
First ever. We're really excited about it.
I want to ask you about when you do your sandbox testing. And the reason I want you to speak about that is Victoria is on the call with us. She is with the North Carolina Innovation Sandbox initiative. And so I think she might be interested in, because heard you mention that the other day, that you took an idea and you put it in the sandbox. And can you speak to that just briefly?
So we participate in a number of sandboxes, whether those are country sandboxes, whether those are product sandboxes at certain companies like Core Systems. So it really depends on the product. It really depends on the use case, the outcome. Certainly, though, we participate in sandbox pilots all over the world. That international transfer I was telling you about between Bolivia and the United States, that was a sandbox that's now come out of it. We're participating in some African sandbox ideas. So the idea behind a sandbox is you go in, there's room to play, there's room to make a mess, there's room to do things, but it's all done with approval from regulators, approval from stakeholders, so that nobody's concerned with doing something and then getting slapped on the wrist later. So we love participating in sandboxes. It's one of the things we do really well, because we build fast and we can pilot and show people how this stuff works very fast.
All right, excellent. The next thing is going to be tell us about the CU, which I say is credit union books acquisition. And then we're going to do one last thing. We're going to wrap this baby up. And I'm sorry that those of you who've got events going on, but we'll see what happens. But all right, John, you got CU Books.
So CU Books, we just acquired a company called CU Books. They had about 20 financial institutions. And what they do is they do service-based, so human-based, back-end reconciliation, books and things like that for financial institutions. we bought them because we were talking with the owners of that, or we merged with them because we were talking with the owners several months back, and they came to us and they were like, hey, we'd like to solve some of this with AI. And we said, great, we'd like to solve it for you with AI. And as we got to talking, they were just such great people and they were so aligned with us. And so now we're looking to solve. We've got a couple use cases right now. For example, there are 53, what's known as 5,300 call report data, where every month a financial institution in the United States has to bundle up all its data and take a CSV file, which is basically an old way of saying a spreadsheet, and send it to the government. Okay. And it's open data, it's public data. And so we are taking that, tokenizing it, putting it on chain, throwing AI on top of it, and helping regulators and helping banks project out their risk of failing 5, 6, 7, 8, 10 years into the future based on the history of all the banks that have existed before them. So really it's to strengthen the system. Right now, the regulators come in when something is already bad. How do we keep the financial infrastructure of the United States from being subject to only having a review when something is off the rails? Let's look down the train tracks and let's see that, okay, let's put the brakes on, stop doing X, stop doing Y. There's plenty of time, nobody panic before banks fail. And the only reason that this happens is because there's been a lack of innovation. There's been a lack of exploratory innovation on the capabilities that AI, DLT, and a lot of this stuff brings us. So we're really excited to be doing stuff like that.
Absolutely. I can tell, it's great. That was a cool merger. Well, let me put it that way. Do you want to speak about Solana yet, or do we need to sort of end it here and give maybe Dennis a few seconds to talk?
Go ahead and give Dennis a few seconds to talk. I've talked enough. I very much appreciate you guys for the time this morning.
Listen, you've been great, and thank you so much, because it's going to cut us off here without any warning. Well, a little warning, but anyway, if Dennis is still on the call, and Victoria, if you want to speak about anything, you're certainly welcome to, and or we just get the hell out of here.
So I can give you just a quick update for North Carolina. So I'm with the North Carolina Regulatory Sandbox Program. We actually began to take applications officially March 31st of this year. We went through our regulatory requirements. We are currently working through our first applicant, and in working through that and learning how to apply our legislation, we are finding there are some nuances that are still kind of handcuffing us to being able to open up those doors for innovation. So a lot of learning lessons going through this application, and we're going to see if we can work to open up that legislation that's guiding this program a little bit more. We're going to see if maybe we can push something through quickly through this budget session. So may happen, may not. But as we're learning and I'm having more experiences like this, we're seeing how we can really truly tweak this legislation to really open up the doors in North Carolina for innovation within the finance and insurance sector. So yeah, if you do have anybody that you come across that has a state level regulatory issue, we would love to talk to them about bringing that project into our sandbox. So right now we're really just boots on the ground, trying to build the concept out for folks and create that trust so that we can bring people in the sandbox. And I would say anybody in this first year, we're going to work really, really hard to make it fit within. At the end of the day, we really want to bring innovation in and ultimately learn how we make our regulations flexible and nimble so that we can continue to meet innovation as it occurs.
So, Victoria, thank you. And you're always gracious to jump on the call or give us a little update. And thank you so much. Dennis, I've got your 2 minutes left. But John, I want to thank you again. Everybody else, I want to thank you because we may just get cut off here immediately. But Dennis, I see you've unmuted your mic.
Yeah, thanks, John.
John, quickly, thank you for joining us. Looking forward to working with you in the future here. I know we've got some immediate opportunities coming up, and we'll be talking here soon. But real quickly, I just want to kind of highlight Salt in Wyoming. If you're any question about where this industry is going, just look at the lineup. That was there. We had Federal Reserve officials, Michelle Bowman, Christopher Waller speaking, Atkins, obviously the two primary senators that are pushing all of this, Senator Lummis and Senator Scott. Eric Trump talked about the future of Bitcoin in America. Jenny Johnson from CEO of Franklin Templeton, industry leaders, from Kraken, Multicoin, Sergey Nazarov from Chainlink, Hoskinson from IOHK, Caitlin Long, of course. I mean, this is just an all-star lineup. I mean, the money in the room was, I couldn't even begin to estimate what's there. I mean, the energy was palpable. You can just, there's so much going on in the background right now, to try to take any sort of a downside look at this industry. There's just strictly a short-term view. I mean, we are going to the moon.
So Dennis, real quickly, were you the one?
Get on, join us for September 18th for the South Carolina Economic Freedom Forum. We'll be tailgating with Stand With Crypto. Jonathan Dunsmore's putting that together in Clemson, first home game, and we'll be right down at USC the following day. Come get your swag. Stickers are in. All the stuff is getting ready to happen. So
yeah,
I'll let you go with that.
Great. Thank you all. Okay, we got less than a minute left. Just thank you so much. Have a great weekend. We've got lots to digest here. Thank everybody so much. We're really
market's on fire. Nasdaq's up almost 2%. S&P 1.57 because Powell indicated most likely a cut in September.
Okay.
We need to have these calls more often. I think it's because of us being on this call right here, actually, if you ask me.
God, I hope so. This has been a profitable morning. Yay.
We could have a call the other Friday during the week.
All right, guys.
That's right. 2 Fridays a week. That's right.
John, thank you again.
Thanks, John.
Thank you. Always a pleasure, guys. Thank you so much.
Thank you. That was
Thank
very
you.
good.